Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Well, the just released gold demand outlook from the World Gold Council is out, and here to talk about it is Juan Carlos Artigas. He's the Director of Investment Research over at the Gold Council. Juan, thanks a lot for coming back on the show.
Thank you so much for having me again, Mike.
Okay, so this covers second quarter demand trends in gold. Let's go over it. First of all, there was a drop, I think about 16% overall in pretty much every component except for investment that went up slightly. Why don't you go through the numbers for us?
Absolutely. So in gold demand trends, what we do is analyze how the flows have worked for a quarter. And a very traditional way to analyze these flows are to use year-on-year comparison. So what happened in Q3 versus what has happened in Q2 2013 versus Q2 2014. Now, when you do that, there is indeed a drop in demand. However, that masks an underlying trend that is quite interesting. The second quarter in 2013 was quite exceptional. It was exceptional in many respects. Obviously, we saw the price of gold drop during that quarter.
Correct.
And we saw outflows from ETFs and movements in other investment vehicles, especially in Western markets. But at the same time, we have a surge, a spike really in consumer demand around the world, but very much in particular in Asia. So when you compare that high volume of demand in 2013 to what happened this year, you see the drop. However, again, it has to be in the context that last year was indeed fairly exceptional.
Now, when you look at the price change with second quarter of this year versus first quarter or even the end of 2013, one of the features we've seen very starkly has been a big drop in volatility. There hasn't been a lot of price movement. I understand what you're saying, and it makes a lot of sense about the demand spike last year when prices came down. You know, gold became more attractive. It almost seems like the price and the volatility is sort of a trigger from time to time to get people to act. When it goes down, you get certain components of demand that come in. When it goes up, you have other elements of demand that comes in. Would that be correct?
Yeah, well, low volatility right now is not only a phenomenon that is happening in the gold market. I think that all markets are experiencing a low volatility period. Now, what you're saying, you know, it's true in the sense that when you have high price movements, people will, you know, make a decision one way or another, whether it is to take advantage of a price correction to enter the market or whether they feel that it's a change in the trend. However, I don't think that it's only the only trigger. I think that what is happening right now more than anything is that people are, or especially investors, are kind of like waiting, are in a holding pattern, especially so that they get a better perspective of what is happening with economic growth, with other financial markets, before they commit one way or another to any other type of positioning. However, I think that some of the signs, especially in investment, with flows in ETFs or the outflows in ETF reducing considerably, is a healthy sign of investors looking again into gold with more calm.
Now, one thing we did see in the report, which is, I think it's very interesting, was a pickup in central bank buying activity, and it almost kind of coincided, it seems to me, in the second quarter with tensions in Ukraine, maybe in the Middle East. Do you think that's a factor there?
Look, I think that emerging markets generally, and this is particularly driven by emerging market central banks, so the purchases of gold. I mean, it is really global, but you can see the concentration in emerging markets. Emerging markets for a while, so this is not only something that has happened this year, have been trying to diversify their reserves from various reasons. Most of them have had an unusually large exposure to the US dollar. And as we look forward into the future, as strong and as important as the dollar can remain and may remain in the system, there is a perception that we will have a multi-currency system more than a single currency system. And in that regard, diversification is quite important. So there are many factors that influence that, but the most important truly is diversification.
Yeah, I think you're absolutely right about that, the diversification and the multi-dollar system. And, it's been talked about openly. I mean, Russian President Vladimir Putin says, he wants to de-dollarize. So I think there's sort of an anti-dollar sentiment emerging, and I think it could work to the benefit of gold, over the long term. Let's talk a little bit about the industrial demand. Okay, that's been kind of soft as well, correct?
Yeah, no. Just before we move really quick to that, I just wanted to say I think that again, this is not about a specific country. I mean, it is really a widespread phenomenon, and I don't think that is necessarily something against the U.S. dollar. It's just a natural progression for diversification. So you have it, in Asia, in Latin America, in Europe. Again, it's not only specific to a particular country. Talking about you were asking about technology and the demand for technology, and it follows more or less, the business cycle. I mean, there is some movement. The price drop in gold last year also helped maybe some of the producers to start utilizing gold. I think that is balancing out, but the overall trend, I mean, actually, technology demand is fairly consistent. It moves a little bit up and down depending on how economic conditions are, but it's fairly consistent.
Now, what have we seen coming from countries like India and China, which traditionally have been very important players? I know there's an import tax in India. It was talked about being taken away. I think it's still there. Maybe has resulted in some cooling of demand from that country. What do you see there?
Well, in China, again, if we go back to 2013, China had an exceptional year. In 2013, collectively, China bought, or Chinese consumers bought about 1,200 tons, north of 1,200 tons of gold during the year, and that was at least 350, 400 tons higher than in previous years. So it is really exceptional. So when you compare it to this year, it does look softer. However, China is still in a longer-term trend. We'll still expect, from China between 900 and 1,000 tons of gold for this year, which is pretty much in line with the trend and with the upward trend that we see since 2011. With respect to India, again, really important country. I don't think that we need to focus so much on the import duties today, but how the new government is thinking about the gold market over the longer run and the longer term. Gold will remain an important component of Indian culture for many years to come, and again, we expect a robust show of demand for this year.
Now, with demand kind of flat, maybe slightly weaker, we have to consider the supply side. How does it look there?
Yeah, well, from the supply perspective, we saw an uptick in mine production. However, the expectations, from the market community and our perspective on some of these flows, is that mine production in particular is likely starting to get into a plateau. So we're not going to see as much increase going forward, and potentially see something different. So that is balancing really the size of the equation. Recycling gold actually has been trending down on a year-on-year basis, or on an annual basis, for quite some time now. And as you said, when you think about gold, it's not only the demand side of the story that matters, but also the supply. And the supply, even though again there was a slight increase in mine production this year, it seems to be stabilizing quite a bit.
When you look at the economic picture globally, it's kind of different everywhere you look. I mean, the United States economy is doing fairly well, but the European economy is weak. Japan, we see the effect of the consumption tax that was put on back in April, but we're starting to see better numbers coming out of China, which might suggest a bottoming and a renewed expansion in that economy. It seems like if they could all sort of gel together, we'd have another leg up in gold. Is that right?
Well, I think that from a demand perspective, a point that you're raising that is important is the relationship between growth and gold. And sometimes Correct. It is perceived that a better growth is not always good news for gold because, well, I mean, investors in particular focus on protection during periods of recession. However, economic growth does bring some positive news for the gold market because there's more wealth, there's more consumer spending, and there's more savings. And especially when it comes to emerging markets like China and even in the US, I mean, we've seen a continuation of consumer demand, in particular in jewelry, going on in the US. So, China potentially seeing a better perspective, we consider that a positive outcome.
I think that's going to be a very important factor to watch. Juan, it's always a pleasure to have you. Thank you very much.
Thank you, Mike.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.